Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. At the moment it's still touch and go with whether or not this pattern, being a rising wedge, and along with the MACD still remaining a weak signal if the bulls can climb back above the levels that we've just seen, which was the highs around 74, 80, 85 last night. At present, though, I think I would rather stand back due to the break of 74.55 and still holding above there. Could see a stop loss move, as in the market's most probably quite short, being the fact is that there has been quite a bit of probably supply all the way through this market. And if we see a further rise and breaking and closing above this level, which you can see here is where this rising wedge is holding, roughly just around that 74.8085. Could trigger a stop loss move and maybe eventually get the bulls caught in a trap and see a significant turn down. As we can see though, as the market has been rising, the RSI has maintained above the midway point. However, that being said, MACD is still relatively weak, which does give very conflicting judgment here, and also the fact that rising wedge, which is bearish. Nevertheless, the market is determined to eventually take out all the shorts in the market before turning around. So therefore I'm going to be neutral at these levels and wait for better opportunities, as I feel the market will eventually turn around and catch the bulls in a trap. The euro over the last 5 trading days has been negative since the rejection above that 121 level. You can see the market has broken down, not completely though, with the RSI flirting with the midway point at 50, as you can see here, and also with the MACD declining. Nevertheless, the market can continue and unfold towards this level, seen somewhere around 119.90 figure before the bulls come back into play. I do feel the market will probably foul towards the top side if any really new challenges emerge. Later today we still have the ECB, which is the European Central Bank monetary policy. It is widely expected to see no change, but do keep an eye on Christine Lagarde's statement after the announcement. Dollar yen is attempting to break higher, and due to the fact that yen weakness coming back into play has pushed the indicators back into a positive fashion, with the MACD above the zero and also with the RSI also breaking higher over the 50 midway point. It is assessed though that since the recent breakdown, I'm still holding the view down to 102.80. However, if we get a close above this line, which is just above around 104.50-60, could see a slight squeeze up towards this challenge, seen around 105. Sterling still unsure due to the Brexit talks still failing to come to any agreement with the EU and the UK, of course. But nevertheless, the market is very whipsawed and challenging. I'm still going to stay neutral. However, keep an eye on these technicals. They are breaking down, and therefore a close under 133 would give a significant fall down to about 131.60. That it means that sterling yen will break further to the downside. Although with the yen climbing at the moment, dollar yen that is, and the yen weaker play has pushed the cross a little bit back to the top side of the range. But I still feel from a technical point, we are still looking down towards the bottom side of the range, around 136 to 137. Gold plummeted $45 overnight, and as you can see, it's broken down after the rejection close to that 1,880 level. I still feel there's a little bit of bearness coming back into play, and there could see that is down to 1,800. And if we do see another strong rejection from this top side of the range, then I feel we are heading back to about 1,755 to 65. And wrapping up with oil, looking at the daily aspect, you can see the market is pretty much unchanged for the last few trading days, as the vaccine in the UK is on its way to being administered to people over 80, I understand, and also to healthcare and other essential personnel. Still, with the technical outlook for the MACD breaking down, could still see a move towards the downside. It's coming in somewhere around 44 or maybe lower, down towards that 41, 42 region. But I feel that as the market still strengthens towards this level, we shouldn't rule out at least a test towards 47 or 48. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the rest of the day.